Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack Technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
Welcome to Markets Now. I'm Michelle Rook with Ted Seifried of Zaner Hedge. Well, mixed closes in both grain and livestock futures trade here on the Thursday. And Ted, let's talk about the soybean market first off. We had a push into new highs for the move, kind of failed at resistance. Why? And do you think we can get through those areas here?
You know, that's a great question, Michelle. We did fail at the 50-day moving average. We got above the 100-day moving average. They're within 3 cents of each other. But we failed right at the 50-day moving average, which also represents the downward trend that we've been in since we put our highs in back in November. So that was a big level of resistance. The first time you try it out, not surprised that we sort of fail at something like that. The good news is, though, that we held support. You know, even though we did close down on the day, the low of the day was the 200-day moving average, and it held that and bounced off it just a little bit. So we're ping-ponging between these moving averages, and that's significant because what it suggests is that we have a market here, Michelle, that is trying to decide direction. And again, the first time having a reversal off of key resistance, that doesn't necessarily mean that we can't go higher. We probably will try it again, and then what we do with that will really be the question. Now, from a technical perspective, we really do need to extend this move higher pretty quickly. Otherwise, you're going to have that 50-day moving average cross below the 100-day moving average. That's called a golden cross. And that's really rather bearish. And when you have technical traders like funds watching things like that really closely, it means we got to try to avoid that. To avoid that, the soybeans are going to have to make new highs and hold them here pretty soon. So we'll see. The fundamental driving factor for that, it could be a lot of different things. It could be something on biofuels, but more likely, the thing that we have on our radar right now is South American weather, in particular with what's going on in Argentina.
Yeah, is the hot, dry conditions that we've seen down there, is that enough to spark enough of a rally to get through the resistance? We have seen a little bit of a downgrade of some of the crop estimates in Argentina.
Yeah, I think we'll see some more of that, actually. Excuse me, I'm curious to see what the USDA is going to do that with that on the next WASDE report. And it certainly has been hot and dry. You know, the temperature's running at the upper band of the 10-year average window. And precip in January was almost 40% lower than that 10-year average. So that is a concern. They did have some really very good subsoil moisture going into this crop year. So that allows them a little bit more time to see. And if they were to get the rains in February, like they did last year, I mean, this is actually kind of a similar setup to last year, only with better subsoil moisture going in. If they get those rains in February, Michelle, we saw what happened last year. They ended up with a rather good crop anyways. If those rains don't come in February, that's really the concern. So we're not quite to the level or the point yet where we have to be hitting the panic button on that South America or that Argentinian crop. But if you fast forward a couple weeks and that forecast is still hot and dry, and they're not getting that big reversal in weather pattern in February, then I think we get really excited about that. And we trade futures, not today's. So, you know, the further we go here, looking out into that forecast into February, the more concerned the market will build into it.
Yeah. Well, not just soybeans, but corn and wheat futures also yesterday and to start today kind of traded this money flow. The lower dollar index at 4-year lows kind of pushed some of the money flow issues that supported the grains. That kind of changed a little bit today too, didn't it?
Yeah, Michelle, you know, when we talk about money flow, a lot of times we like to throw different terms around, you know, risk on being a big one. This was not a risk on event. You look at the stock market, it was down pretty well. This is what I think a lot of us would call a reallocation event. Maybe paring back some of the bullish stock market bets that some of these big money managers had and looking for other things. With the dollar dropping as much as it has, there's been a lot of talk lately about renewing inflation. And also the Fed leaving rates unchanged shows that they're concerned about inflation as well. And so I think there's been a lot of talk about money being reallocated to commodities. And you know, generally speaking, that's a commodity-wide thing. So the grains finding some strength in that. The other thing you had going on was a lot of strength in crude oil. So when you have crude oil, i.e. energies, strong, the alternative energies, biofuels, biodiesel, ethanol, they tend to find some strength as well. And by the way, ethanol has been running along at a wonderful clip. I mean, we talk about how strong our pace of exports of corn are, and that is great. But ethanol, I don't think gets enough credit for how well it's doing. Also, demand for corn overall is really rather strong. So very strong. So yeah, a lot of things kind of coming in from an outside market perspective that have been a bit positive for these markets the last couple days. In the case of soybeans, I think a lot of that the lack of holding on to that positivity, I think, had a lot to do with technicals, like we just talked about. But yeah, no, you do have some positive things on the outside markets that are influencing us at the moment too.
Yeah, and that's been true of corn and wheat as well. The corn market today, let's talk about that one because we're kind of stuck in this trading range again where we can't get above these overhead resistance areas. And so what do you think it's going to take to get above those areas? Because higher crude oil and higher wheat market today didn't seem to be able to do it.
Yeah, I mean, the other thing that we forget though, Michelle, is that it's the time of year where we do see a fair amount of cash corn movement, right? I mean, we're in that window in between. We've started the new tax season, so we had been maybe possibly holding things back for the new tax year. So we're into that new tax year. Pretty soon we're going to get busy planting, and we won't have the time for hauling. And this is the time of year where we have our biggest, cash flow needs. So I do think you are seeing some producer selling happening when we have these moves up. I know guys were hoping that we would have gotten a bullish report and gone the other way than what we did on that big January WASDE report from a couple of weeks ago. But now it's just that time where things have to move. So I think that's sort of the limiting factor at the moment. However, again, Argentina, right? I mean, this is a building story that if that forecast, I mean, if it doesn't start raining pretty soon in February, we're going to start really worrying about that corn crop. That will be a pretty positive thing for corn. But overall, right? You look at that report and how negative an effect that had on us. But that's that's a reflection of last year's crop, and that's something that the market has been theoretically pricing in really since last August. So looking forward, you have a lot of risk points. You have Argentina risk. You have that second season crop that hasn't even gotten planted yet in Brazil. You have our planting season and our growing season. So this is the time of year where seasonally we do find some strength because of all those weather risks that we have in multiple different places in the world. And so I do think that this is a year, unlike the last couple, where we do have this sort of seasonal tendency to move higher as we get closer and into planting, and get worried about South American weather and is it going to be great and all those things.
So wheat from a technical standpoint has had a bit of a chart breakout this week to new highs for the move even today. I know that the lower dollar index probably helps with that, but has this all been short covering basically? And do you think we can even keep it going here?
Yeah, great question. Okay, so I think the biggest driving factor for the wheat has been short covering. The funds were really rather short wheat, and I think they've been given a few reasons to question that short position at the very least, right? So that's been adding some strength to wheat. There's been geopolitical issues that things are kind of escalating in other parts of the world. That helps the wheat prices. Also, weather. It's been bitterly cold, and while I haven't really heard much in the way of reports of winter kill, these cold temperatures provide risk. We just talked about all the risks that stand in the way for corn in particular. But when you have that weather risk and you have funds that are short, they say, wait, I don't know if I want to be short this market right now. Let's see what happens with all these things that are going on. The other thing is that they're technical traders. And when you look at the low that we put in on the first trading day of January, yes, it was a new contract low, but it wasn't as low as what it should have been if it were following the downward trending channel that we had been in since April of last year. And so when that happens, when that low isn't low enough for to hold that downward trending channel, stop short of the lower end of that downward trending channel, that can be a technical sign that maybe this is a market that's losing momentum to the downside. And again, when you have funds that are technical traders and they see something like that and they say, oh, losing momentum to the downside, oh, we're really short. And then all of a sudden you have some things that are causing concern or uncertainty for them, and they start getting out. Now we start doing some things on a chart that actually makes them think, oh, maybe I shouldn't be short. I don't know if they start looking to go long at any point, Michelle. I don't know if the fundamentals are really that much more bullish than they were a few weeks ago. But you do have a technical reason for them to kind of step aside for the moment.
Cattle market went up, made new highs for the move, I think, in both live and feeder cattle futures before turning lower. Was that following the stock market or some of the outside markets, or was this part of this reallocation of assets that you talk about?
I think though that's when you talk about reallocation of assets, I think the funds look at markets that they're not already really long, or other funds or money managers as a whole aren't already really long. And so when they look at the cattle market and they look at a long-term bull market, similar to like gold and silver, these are markets that kind of scare them a little bit because they get very overbought and very one-sided, right? So I don't know if we're seeing a whole lot of reallocation of funds into commodities, specifically going into cattle for that reason. So there's that. But when we talk about like the stock market, right? There's a reason why they're looking at commodities, and that's because the stock markets, although we've had some higher days before today, they're not big up days. It's been staying within a range, and overall, it kind of looks like it's rolling over or has the potential to roll over to the downside. That's important for cattle because we oftentimes look at the stock market to try to get a gauge of what consumer demand, domestic consumer demand might be. The theory there has always been, Michelle, that if you're putting pressure on the stock market, people worry about their 401ks and they're not as willing to spend, especially on things like high priced beef. And we can all agree that beef is really rather high priced, comparatively speaking right now. So it makes us worry about what demand might look like going into a month that is usually our lowest demand sort of month of the year in February anyways. And then you've got a report coming out. It's a biannual report. It's a very big report. So, short covering in front of that report, all those things kind of coming together.
So, Ted, we could just chalk up the pullback in cattle then just to some profit taking ahead of the report, but also the fact that we haven't had any cash trade development, huh?
Yeah, that, and like I said, I think there's a lot of caution about what demand might look like in a few weeks. So I think that is keeping the speculative bulls at bay for the moment, and really has been since the beginning of the year.
And the hog market back months continue to push or grind up into the contract highs here. We had strong exports this morning. Is this a demand push or is this supply concerns because of disease?
To some extent, not surprised that we had the cool off day yesterday. I mean, we're down pretty well yesterday, but that came after a new high in the April hogs. We're very overbought, right? And so, yeah, I think at this point, taking a bit of a pause. But when you talk about the demand concerns for high priced beef, for example, it's different when we talk about pork because it's a much cheaper value proposition. I think from a pork standpoint, if we were to have a bigger break in the stock market and we were to say, oh, consumers might be more concerned now about spending money on high priced items at the butcher's counter, well, that's really more beef. It might actually mean more pork demand as the cheaper substitute. So completely different story there. And look, the hard chart looks good. Yes, we have disease issues, and demand has been really rather good. If I'm just looking at the chart, I don't think we're quite done yet with this march higher.
Okay, thanks so much. That's Ted Seifried with Zaner Ag Hedge and Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack trait technology, featuring 3 powerful modes of action to strike corn rootworm at full force. Outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com.